big report day, John. We're going to cover every number in detail, right? Just down to the minutest detail.
We're going to skim the numbers, but boy, oh boy, did we dodge a bullet today. I'm happy. I'm happy with the numbers. We'll dive into them and see what they say.
Let's go.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I got a little news for you. We have an exciting new partnership that's going to start very, very, very soon here that's going to provide some very important ag info.
Yes, I'm excited too.
Good. I hope you are.
Yeah, it's a great fit, and we'll be talking a lot about it in the days ahead.
Excellent. On the podcast note, there was something that happened today, I think. Federal government numbers.
Only the biggest report of the year happened today. That is the June 30th report.
Snooze fest?
No. Well, I would say for that report, it was a snooze fest. Now, we're going to dive into some numbers, but we're not going to bore you with the exact everything. We're not going to hit every category. But just know that a huge bullet was dodged. This is notorious. This report is notorious for bad news showing up, meaning if corn is supportive, it usually comes at the cost of beans being bearish. It's really hard to get through a report with everybody unscathed here. Sure, there's been limit up or near limit up days after this, but there's been more limit down or big moves down than up. Today, they found the balance. Guess what? They nailed the numbers. No. Of course, because I was talking straddles, buying straddles.
Yep.
Buying volatility. I'm the one that caused this to be a completely neutral report when it never is.
So actually, technically, at least for a little bit, those straddles would have been not great, but
they didn't make money for 1 second after the report was released. They instantly drained the report premium out like faster than you could snap your fingers, meaning implied volatility dropped. Very normal after report. That's neutral, but this one wasn't expected to be neutral. Let's dive into the interesting numbers. The ones that really stood out at me, these are ones that make for great baseball stats, is the wheat is the lowest planted acreage since 1919. Now that's crazy, but ratcheted up another level, and the predicted harvested acres of wheat, 31.2 million, lowest since 1877. So they because of
we were tracking that in 1877
because of the smaller Kansas crop. So the wheat clearly is on the way out in the U.S. For locally around here in this area, we're looking at some of the lowest spring wheat area like planted acres in 56 years. Down 6% from last year. We're under 10 million now, getting close to 8 million something. We're 9.
I guess all the hippies are gluten free.
Exactly. You have a tale of two markets. We joke about the wheat, the cattle wheat spread, but honestly, that's really what's happening in the food world. Is people are getting away from the gluten, getting away from the carbohydrates, and going to the better protein. And that is a spread that's real, and you are seeing it play out in real time. There's more going on cattle than just the good demand for protein, but really, you're not wrong. That's exactly what's happening. The market's pricing wheat in such a terrible way. The elevator discounts also are doing a good job. Even if you grow it, even if the board looks good, somehow you still don't get paid. And the market's responding. They're saying we're not going to grow wheat. Look for that to continue to shrink. Also, some good news. The one number that stood out to me was corn quarterly stocks. There was disappearance there. We went down. They were expecting. I don't even remember the number. 5.2. The trade was expecting 5.4. It was 5.295. Now, why is that important? It's important because the quarterly stocks is where they can sneak in a lot of these bushels that just appear out of nowhere or seemingly appear out of nowhere. When you start seeing reports like this, that's great news. And to me, that's a number that's the most important by a ways. This is exactly what the corn market needed today to stop going down. That there's disappearance there that we don't know why it's happening. Is it that there wasn't as high a yield last year? Everybody's got their theory on why it is that way. Demand is phenomenal. If we saw negative numbers in corn, and quickly the acreage was almost exactly what it was in March. It was 95.34, and in March planting intentions it was 95.33. Basically, I think, what is that? Is that a 10,000 acre difference? If I'm not mistaken there. So almost the identical number.
I don't know how to count that high, so you're asking the wrong guy on that one.
I think it was within 10,000 acres of the March report, which is one little tiny hailstorm. And then you look at the beans, that is up significantly from last year. We've been talking about the 81 million acres number from last year, how low that was. It's, of course, 85.36. No big surprises. I mean, all the numbers were what they thought they were going to be within a couple 100,000, from the analysts.
I would say the demand numbers to me were a little, not necessarily surprising because we've seen the demand, but that it was acknowledged in the report that the demand was high across the board was a good thing to see.
Well, in the USDA, in their defense, has been putting high demand numbers in corn and beans. Now, we've been living up to them in corn and beyond that. Last year I thought it was silly, the demand numbers. I thought they were just trying to make it not completely crash to nothing. But actually, it outdid the numbers the USDA even had last year. So we have great demand. We have some good news today. This is a report that can kill the grains, meaning that momentum's usually already down this time of year. And this is the one that can just completely wipe it out and start to head towards that August low. That didn't happen today. We had almost a relief rally right after the numbers came out. Is this the bottom? Isn't it the bottom? Just enjoy that it's not going down. This could be an absolute report killer. And I just think that it's a turning point. I also think the corn acres and the bean acres are high when you combine them. I think they're among the highest ever. But these are also probably peak numbers, with the numbers the way they are. Start expecting beans and corn, cross your fingers, to start reeling backwards in the acreage as well. We should peak. This should be the peak of all the bear numbers, in my opinion. That's why I think it's a hallmark, just like a really important report. I think this is where you're going to see the peak of the bearishness. Now, I don't want to eat my words in the next report. Yes, they could add acreage with, and they did last year, but still, this is, I don't know that guys know how big a bullet they dodged, and it doesn't feel like a bullet dodge.
I do have a question for you, though, because just something when I was watching just the market book during the report right after, I do feel like there was selling going on into the rally that came after this.
They did, but these aren't bullish numbers where you would expect a huge rally. But you wouldn't expect a sell off these. But the initial reaction was up 8.5, and it didn't blink. You know what I mean? And then beans were up 14, but then easily it was sold into initially. Now, what is that? Some of that's going to just be sales that need to be done. Guys are holding too much stuff. The Minnesota numbers, which is where we are terrible for corn. There's ton on farm in Minnesota. So if you're in Minnesota, there's a reason why the basis is bad. They're not picking on us. It's our conservative nature. Everybody holds on to stuff they tend to hold it on to too long. And Minnesota is the king of the hill this year for bushels left over. I've been getting calls on basis and what to expect. You can tell guys are looking for rallies to unload on, that held too long. And those were a few phone calls that I fielded today. Should I sell into this? So that's what you're talking about. You're definitely going to get interest into selling this rally because of time of year and old crop being left over. That being said, if we can get past this without significantly weakening anything up, you get China interested in, we're in much better shape than last year where China wasn't even buying anything in beans. We have the RVO. We have China possibly in the mix for a number of different things. It's just nice to see that they didn't kill the markets today. Now the bulls are going to say, oh, thank you for not getting us, 50% of the cost of production. but take the small victories. These are actually very meaningful when you start seeing the tide change in reports this time of year. Unless the weather gets a lot better than this, you might continually see smaller and smaller numbers. And that's really what we're focusing on. So what kind of positions? What should we be doing? What are we looking at for hedges into 27?
Should we be selling into these rallies?
Yeah. So at least now, and this is another important thing, we can have a weather rally because we sold off so early that now if the weather changes to where it doesn't look like we're going to have these high water marks in yield, you can sell, they could actually buy the market, meaning the funds momentum stopped to the downside today. They didn't have any new fuel for the next leg lower. So it's going to come down to weather patterns. They've already trimmed some of the rain out of the forecast for the heat dome of death. They've already kind of revved up the temperatures a little bit and then, have that. So we can have a weather market. As weird as that is to say this time of year, it's definitely possible because we sold off and had, this perfect crop in the bin well before it's in the bin, because we have had that for the last 2 years. So take the small victories. It actually could be very meaningful if this is the trend you start seeing in the other reports. I feel like there could have been acreage that no one knew about because the weather was good and there was no prevent plant. So long story short, and I think I just mentioned it, is that these should be the peak bearish numbers, and I hope I didn't jinx it. But if you can survive and hit those doubles and singles, make good sales, this could be turning a corner. That being said, you're still getting a large amount of corn and bean acres in overproduction. So temper your expectations, look to hit singles and doubles, but at least there's a little bit of light at the end of the tunnel. You go back a year ago from, we're looking at 2 million more corn acres and like a yield that was going up daily with rain in the forecast. At least we're not there. This should be a different sort of year. We got a lot of numbers to go, but again, big report. We got past that, and we need to start planning for 27. Ryan and I talk about this often. Everybody's worried about old crop. Start working on 27 for plans and break these cycles that you keep on storing into 26, or into the next year way too deep. I'm not saying we have all the answers, but you certainly can look at stuff. I've had a couple calls, and should I lock in 27 corn? In all these different mixes of different things, these are personal conversations we're having, but you need to start planning for 27 right now, whether it's selling calls, buying puts, whatever you're doing, a lot of different combinations of a lot of different stuff. You don't want to run into the same cycle over and over again where you're holding all this old crop and selling it and calling what should I do with my old crop when there's nothing left to do.
Yeah, I think we talk all the time that every operation's different. Like there's not one plan, but there are consistencies that we see across the board that we'd be happy to share some of those ideas with anyone who wants to reach out.
Yeah, so. We don't have all the answers. We're just bouncing ideas off. Maybe you hadn't thought of this. Maybe, this fits your operation really well where it won't work for the next guy. There is no one size fits all at all. It's a very personal thing, and that's what we believe in, having those personal conversations and try to plan. Now, was it an easy year? No. With Iran stuff going on and the tariffs, the trade war on and off, the Iran war on and off, to this day it's still happening.
I just heard that question on Meet the Press. You said that the war's off, but we bombed last night.
Yeah, so it's not been an easy marketing year, and then the sell-off before we saw any of the weather. Again, this is the second year in a row. Last year was harder than this year, though. Well, it was very comparable. We had 1.2 billion bushel carryover, which is pipeline supplies for corn, yet the number wasn't correct, and we sold off in February. Somehow the funds knew that the number wasn't correct, and they were correct in selling it off. But anyway, it's not been easy, but I'm hoping this is light at the end of the tunnel. I hope things change. We still have our same problems, setting out payments and getting too much acreage.
Yeah. I mean, there's one way to change, at least for you.
What's that?
That is to do something different.
Yes, do something. I'm going to buy the stock market. I've threatened. I'm about ready to buy it, and everybody else out there can short it because that's probably
I was just going to say, I'll get my shorts ready.
Why not just hop on the thing and ride it to glory? Why not?
Well, why not talk about the stock market more, John? I mean, what do you see going on? Broad-based economically.
Japan is a problem. Okay. That's where all the cheap money in the world's coming from. That is slowly unraveling. Again, back to my doom and gloom, and that's why I won't.
I love when you go doom and gloom. Let's go.
That's why I won't buy the stock market. I was just kidding. I won't do it because of Japan. That's basically the world's piggy bank for low interest rates via the carry trade. That is starting to unwind, meaning Japan's interest rates are naturally starting to come up. Either they're going to have to defend their currency and sell U.S. bonds, or you're going to have rapidly rising interest rates, and their currency is going to appreciate rapidly. So you have those issues there. I continue to think that's going to eventually lead to all this easy money around the world, slowly tightening up. We're seeing it in the housing market in Fergus. I use this small town as a good gauge. It's very conservative. You don't see a lot of fluctuations, but you are seeing the real estate cool off here. The high-end stuff definitely not moving, and you're seeing everything starting to slow down. The stock market has yet to show that. It's just, it's full steam ahead every day. But if people don't have money, you can't get blood from a turnip. I thought 3 years ago people were tapped out on spending, but it does look like it is still trending that way. It's very cyclical. People get very political about it. But it is a cyclical thing, and it's well overdue for a large correction here. But that being said, I sit here on the sidelines, egg on my face, because I'm not a part of the stock market every day.
We talk about it all the time. Remember 2008 when you could have bought, when you had your list of things you could buy?
I started making this stock list as these things I remember Adobe and all this tech stuff. And it's like this Ottertail Power, which is just a steady energy company here in the region. And that was getting crushed. Everything that, all these dream buys were happening in 2008. And it just switched so fast to go back up that it was really hard to get involved. I remember there was a basket of stocks.
It sure looks like that now if you go back and look at the chart.
Which
is something to keep in mind when you're trading. So,
one of my clients just loved hot trade. He was just an old school hot trade sort of guy. Even though I don't sell ETFs and I'm not in the stock market as far as clients go, we were looking at this basket of southern banks down southwest banks. And it was a basket of a number of different banks, and the ETF was down to $1. And Gary was his name. I said, Gary, either this is going to zero or this is going to be the bottom. Trade accordingly. And he ended up buying. I don't remember how many shares, quite a few, and it ended up being the bottom. And I went on to go much higher. But there was countless things that were happening in 2008 that looked like they were going to zero. Forward stock, where was that? I mean, that was very low. Was it like a quarter or was it $1? It was something ridiculous. You name it, it had fallen. Then the government backed everything up, and we never actually did correct. It was a very short correction, and we've been going up ever since with a couple shallow corrections. So I do think that'll factor in this year. I'm just happy this report's behind us. I think that guys can plan better. It's not clear what direction this is going to go. I think corn ended up 6. I think beans ended up 5 or 6 as well. But at least it wasn't that gigantic sell-off. I also hold hope that those were the biggest numbers that we're going to see, and we're gonna ratchet down from here. I'm not hoping for bad crops. I just think that they have a lot of good news factored in, and with this demand base that we're seeing, that we could see actually a fundamental shift here slowly taking place in the summer of 2026. Now, that being said, you're going to have plenty of bears out there pointing out that we have large ending stocks of beans and corn. And I would say that's true, and temper your expectations. Still look for singles and doubles, and there's going to be opportunities here. There's definitely opportunities.
Are we fully a weather market now for the next month or two? Or what else could be out there? What else are we watching?
We were momentum going into this report, which has been a problem. It's all one direction or all the other, but that took the wind out of the momentum sales. And we'll find out tonight. They might try to resell and start driving it lower. But I would say, yes, we are definitely going to turn into a weather market now, because we had sold off so sharply, early, a lot earlier than we normally would have. So I would say follow the weather. There's things like in Kansas City wheat I'm tracking. So there's a lot of stuff I'm tracking that are setting up a lot of the, bull spreads for next year. Old crop, new crop, Kansas wheat, which would be the May, July contract. There's 5 cents a carry there, or 4 1/4. The problem we have is what I just said. There's a lot of grain around. You can't get ahead of yourself, but what you can start doing is planning. We had a very good hedge that we put on last year. It was one of the bright spots for hedging last year. We plan on repeating that in corn. Guys that are subscribed are going to see exactly what we're up to. You start that's when I say start to plan, start to look at what worked over the last couple of years and then start planning that way, because we're in a really similar pattern. Although this year could get better than the last 2 years earlier, if that makes sense to you.
I'm trying to track that in my head.
Well,
but it makes sense.
The numbers just kept getting worse and worse for the corn as we got into the January report.
Yep.
We might have seen the worst number today. Others are going to argue there's going to be a lot of ugly acreage coming up in the next reports all the way to January.
Yeah.
But I still think if we were going to see that trend, we would have saw that happen today.
Yeah.
And we did see that last year. We had a surprise 2 million acre increase in corn last year in this one.
Yeah.
I think that this sets the pace for a lot of the other reports is what. And then we're going to start seeing yield come out in the reports. That's also going to factor in huge, as far as what price direction, because as bearish as this is, it doesn't take it much to tip the pendulum very bullish very quickly for beans and corn, because we built this great demand base. Crushes record, profits. And you're seeing all these guys. As a matter of fact, everybody in the line of buying your grains, everybody after you sell it is making more money than they made in the recent past, meaning everybody but the producer is actually making money because of the demand. And it's just a matter of time before that circles back for the producer. I hope it's not. I hope it's not like cattle, where they literally run so many people. It's so bad for so long they run people out of business, and then it explodes. That's not what you want to see in grains. That can happen that way, though, which would be enough people get out of business, or enough the marginal acre goes back to other things. So in between data centers, solar farms, wind farm, you're getting this urban sprawl, and you're getting all this stuff in the countryside. We, like I say, cross your fingers, are looking at peak everything for acreage, because that's really where all the problems are. It's not a demand problem, it's an overproduction problem. And I'm hoping that it's starting to reel back. You're definitely seeing that in wheat. You just haven't seen it in corn and beans yet, but I think that you're going to.
An interesting prediction. I like that.
Yeah, you gotta throw something out there. No, I do believe it. Yeah. You can just feel these cycles turning. I'm early in corn, which I'm often early in, but we're just one bump in the road away from being a completely different market. Whether China comes in buying corn, whether it's too much rain in the fall and takes the harvested acres go down. It's not very far away from being a completely different market. But again, I'll leave you with temper your expectations, because it isn't bullish after this report. It's just not incredibly bearish.
Yes. So, but the point being that what is I always look at likely scenarios, right? So, the trend might be that it's not bullish. The things that can happen lean towards the bull side, like the outlier things that can happen.
Yeah.
Bad weather, or
which hasn't happened for 2 years.
Yep. Or those things lean towards the bullish side. Well, the momentum maybe is leaning more towards the bearish side.
Yeah. And the bears are very vocal online about corn, saying rain makes grain, and all these then the heat comes to they're saying, oh, that's going to be really bad with all this rain. They're right in that's correct. Like, rain does make grain, and the heat's going to help and all that stuff. Where they're wrong is, you'd be hard-pressed to find a handful of counties last year that even had a weather issue of any kind, where you're having multiple weather issues all over the United States, and we're more towards a normal year. I'm not saying it's bad. I'm just saying normal, where you could see the yield fall to 179, 178, and it would be a completely different market. You'd still have near record production, but it's because of the demand base that we're building that for a 4 bushel drop in projected yield would make all the difference in the world, which would, like I say, a little ding up here, dinged up there, top end off in Iowa. That kind of stuff starts happening, and then all of a sudden you land at that, where the corn numbers are very different. And that's kind of what we're hoping for. But, next episode we'll go over specifically what you can expect for the rest of the summer going into fall, and kind of covering what we saw the last couple of years.
Sounds good. Anything else for today, Chad?
Yeah, cattle. Cattle's got a really bad look. Yes, we're discounted to where the cash is, but how long have we been talking about that? 3 weeks now? It is a futures market. The futures are predicting worse demand, which makes sense after the 4th of July. And you see feeder demand peak out going into August, and you see things reel back. The futures are saying that's going to happen this year. The fundamentals are saying, hey, wait a minute, there's no cattle out there. So you're seeing a pretty good battle here, but definitely the futures are giving off warning signs that it is, you're getting a lot of good news and you're not going higher, is what I'm trying to say. But we have seen this cycle a few times. That doesn't mean cattle's topping, but it is a warning sign. And one of these times, guess what's going to happen? It's going to actually be the top. Not that I'm cheering for it, but how long are we into this cycle? 3 years?
It's been a while.
It has been a while.
Long enough that I stopped trying to short it, and I usually don't stop trying to short stuff for a long time.
No, and like I say, going forward after this report, you're looking at singles and doubles. You're not looking at home runs right now, in my opinion. And it's gonna be nickel and diming it. There should be some good opportunities. The volatility looks like it's gonna die down a little bit for now. And if there is gonna be volatility, it sure looks like up, not down. But it is what it is. I'm glad we're past this report, and we can go out and enjoy the incredible humidity that we're getting here. And when I say incredible, it's horrible. It's just the worst ever, unless you like to sweat instantly when you go outside. Then it's just like Florida. We're in Florida right now.
Last night I grilled, and I was preheating the grill, and I went and opened the cover. It was not a blast of heat. It was a blast of steam that came off that grill. There was so much steam under that cover. It wasn't even just heat out of the grill. I thought I was steaming my food.
All it does is rain around here, and all I do is mow the lawn.
And rain makes grain.
That's all we're going to have. We could have a record here. Like, I'm not trading, looking out my back window. We just, all we're doing is catching rain here, and the stuff looks like a movie. I'll put a couple pictures online to see what it is looking a little bit special out there. Although I'm told by guys, producers in the area, once you get out there, it's not as good as it looks. You do hear that quite often. But it's been kind of a wonky weather. We're catching rain, and I am tired of mowing. Really tired.
Yeah, well, my kid mows, so I don't worry about it.
It's time to go fishing. It's fishing tomorrow.
I like it.
Yep, let's do it.
Yeah, what's the walleye pattern? We should share that with. Where are you finding them?
The bite is good. They are. They're good.
9 to 12 on a weed line, or
yeah, weeds for sure. And
in the weeds or outside them?
They are, the bait's right outside the weeds,
okay,
and the fish are right outside the bait. You could have a textbook, crack it open on how to fish, and that's what it would show you in the pictures. It's exactly what's happening this year. Actually, because it was so cool for so long, the weed growth is minimal right now, so the bait is hanging around all the weeds that are growing, the little patches that are growing. But as summer progresses, of course, the weeds will pop up everywhere, and things will change.
All right. Why don't you leave your number, John?
218-731-1578.
Thanks, John.
Yep.